Welcome, everyone. My name is Jill Sekulis, and I'm the Director of Operations at St. Mark's in New Canaan, Connecticut, which is in the New York metro area. I'm also a board member for the Episcopal Parish Network, where the church gathers, and I have a special interest in this topic today because I am the treasurer of the board for Episcopal Parish Network. So I both work with my own parish treasurer and serve as a treasurer. So I'm really, really interested in the conversation today, and I really appreciate Dan and Roman from the Diocese of Central Florida being with us today to share their wisdom. A few housekeeping items for you. First, we're so glad that more than 60 of you have already joined today this webinar. We think that's great, and we hope that you take advantage of all kinds of opportunities that we have here at EPN, including the biggest and most fun one, which is coming up March 3rd through 6th, is our conference in Charlotte, North Carolina. So the early bird registration for that opens on October 15th. I encourage you to sign up. I'm particularly fond of the pre-conferences, where we gather with our individual cohorts. It's a great, great networking time and a great time for wisdom sharing. So I really encourage everyone to try it. If you're trying to figure out how to fit it into your budget, call me and I'll help you figure it out. And a couple of procedural items. First, I see a lot of you are regulars to these kinds of events, so you're already doing the thing I was going to ask you to do, which is introduce yourself in the chat with your name, your parish or parachurch organization, and your city. And also, just for fun, if you're a treasurer, please note that too. Then also, everybody should know that the session is being recorded, and in 24 to 48 hours, because Laura's amazing, you'll get an email with a link to the recording, and it will also include the chat, which is where all the questions will be asked and some of them even answered. We do not use the QA function for questions, so if you have a question, please put it in the chat. Let's see, any other questions? I think that's all the housekeeping things, so we can get right to work here. I thank everyone for coming, and I thank Dan and Roman for being here to share their information with us. So now I'm just going to introduce Dan Smith, who is the Canon to the Ordinary in the Diocese of Central Florida. Dan, welcome.
Hi, thank you. Thank you for the introduction and welcome everybody. I already see names I know in the chat line. Maybe a shout out particularly to Bill Smith in West Des Moines, Iowa, who once upon a time was my own senior warden. And on a whole nother lifetime 20 plus years ago. So it's great to see names that I recognize and folks that are there. Roman and I work together, of course, with the Diocese of Central Florida. We've both been with the diocese. I've been with the diocese a little over 2 years, and Roman's been with us about a little over a year and a half. We both are part of a new episcopate here, with Justin Holcomb being elected bishop and consecrated in June of 23. So we're part of a new team and a new episcopate that's a part of our life together. Both Roman and I are Florida boys. Roman grew up in DeLand. I grew up in Orlando. My career has taken me various places around the country. Roman has a background in personal finance. He's owned companies that did financial advising. He's also been CEO of a for-profit organization, all with financial planning and financial background. Roman also comes to us from a family of pastors. He thinks of himself as the black sheep. He went into finances when everybody else is preaching the gospel someplace. But this gives him a chance to bring in his faith as well as his financial acumen into our life together. Today, what we want to do is spend some time. Our title has been managers or leaders, and in fact, treasurers are both. Managers and leaders, although we want to spend most of our time with you today talking about the leadership that treasurers can do inside of a congregation. Before we get strictly to treasurers, I want to remind us, though, of some issues around church size and dynamics of church size. We generally talk about churches being 5 different sizes: family, pastoral, transition, program, and resource. Now, we're going to leave transition out of the equation for the most part because congregations that are in transition size either act as a pastoral size church, in which case they often go back to being pastoral size, or they act as a program size, in which case they grow into that program size. But the issue that I want us to realize as we talk about treasures and as we talk about leadership is that those first two size categories, family and pastoral, are both largely informal in their nature. It's word of mouth. It is, I don't want to say simple by any stretch of the imagination, but it is far less complicated than the program size congregation or certainly the resource size congregation. With those size congregations, they are much more formal in their nature. They often are far more complicated. They often have more things like trusts or endowments or other kinds of funds available to them, where many of our family size and pastoral size congregations really are relying for the most part on plate and pledge, and maybe income from rentals or things like that. But those other two sizes, program and resource, end up being a good bit more complicated. And so, in some ways, some of our conversation today will lean us towards those two larger size categories. But I think there's information for us today that would fit with any size congregation, particularly when we start really talking about how Roman and I see leadership as a primary role for treasurers. Um, and I really do mean primary. There's lots of things Roman's getting ready to talk about that a treasurer needs to be able to do in terms of management, but we really do believe that a treasurer is part of the strategic leadership of a congregation, or for that matter, of a diocese, as you'll learn as we go along. So with that, I'm going to turn it over to Roman. He's going to do some introduction about some of the basics that a treasurer needs to be able to do.
Thank you, Canon Dan. Welcome, everyone. So we know that the role of a parish treasurer comes with a momentous responsibility. The foundation of that is in a handful of key areas, or can be articulated in a handful of key areas. Financial oversight, budgeting and reporting, stewardship and accountability, compliance and risk management, banking and investments, and collaboration and support. We'll go into detail a little bit into some of these as we talk about leadership or strategic leadership, specifically collaboration and support. But as Canon Dan referenced, the first 4 or 5 on that list are really operational or managerial functions. Because many of our treasurers are lay leaders with business experience, I'm going to articulate sort of my thought processes around our structure in the Episcopal Church and Episcopal parishes and how it relates to the corporate world or secular organizational structures. For example, when I think of parish leadership roles, and this is pretty clear cut, but I see the vestry as the board of directors. I see the rector as the chief executive officer, the senior warden as the chief operating officer, and the treasurer as the chief financial officer. Some of you may or may not know that traditionally a chief financial officer's responsibilities are typically forward-looking. They're strategic, they're planning, they're structural, they're problem-solving, as opposed to a controller or an accountant or a bookkeeper that is backward-looking and reporting on activities that have already occurred. So this is where segregation of duties comes into play, and needing segregation of duties so that treasurers don't end up in a position where they have to play double duty and provide bookkeeping assistance or services that are more managerial at a lower level and can remain strategic in their leadership. To better understand the strategic leadership potential of parish treasurers, I want to talk a little more about a corporate CFO. That is my background prior to the diocese. And so I think about the responsibilities of a CFO, whether it be in a for-profit or a not-for-profit company. But typically, the CFO is going to provide oversight of the backward-looking financial reporting process and a team that's responsible for those functions, while that team of accountants, let's just say they're being managed, are performing the day in, day out blocking and tackling of the accounting department or the finance department. A parish treasurer similarly serves in that capacity by working with the parish bookkeeper. So a parish bookkeeper or a parish accountant is to a parish treasurer, from our perspective, strategically, structurally, as a full charge bookkeeper or a staff accountant or a team of accountants might be for a corporate CFO. Additionally, a CFO collaborates with the CEO to determine the viability of business and investment opportunities. This is typically to ensure the company is operating within its means. A parish treasurer monitors cash flow and provides regular reports, typically monthly treasurer's reports for vestry review. Part of the purpose of this function is to ensure that parishes are living within their means and understand accurately the assets that they're stewards of, that their fiduciary obligation covers. Lastly, a CFO is responsible for ensuring the corporation is compliant with local and federal tax regulations, business regulations. Similarly, a parish treasurer is responsible for ensuring that the parish's financial practices are following the manual of business methods in church affairs, as well as diocesan policies and canonical financial policies. So as treasurers with larger congregations, as Canon Dan referenced already, as they focus more on parish leadership, they can work more closely with the vestry and their rector to align the finances of the parish with the church's mission. Their presentation of accurate financial data and insight to quantify the necessary investment in various phases of the parish vision can greatly contribute to the parish's success in realizing and fulfilling its vision. Treasurers are often on the front lines of receiving that vision from the rector with the support of the vestry. And the treasurer steps in to create a financial plan for how to fulfill that vision. It could be the launch of a new college campus ministry, a food pantry, the creation of a new memorial garden. Any of those topics or others, the treasurer can lead as the quantitative voice that provides clarity and develops an action plan for spreading the gospel and enriching the lives of the parishioners and the community. So with that, I believe treasurers are uniquely positioned to define where a congregation is, quantify where it wants to be, and work with the vestry and rector to develop a strategic plan for how to get there. With that, I'll pass it back to you, Canon Dan.
Good, thank you. That's really helpful. And I want to take off from there. And part of what I want to say as we begin to shift this conversation towards more in the leadership role is that one of the things as canon of the ordinary I hear from rectors of congregations is that they're often told, and this may be stepping on toes and may be unfair, maybe all those kinds of things, but the complaints that I hear from clergy is that often their treasurer tells them what they can't do, as opposed to what they can do. And of course, I will tell you that when I was a rector of a parish, I always wanted my treasurer to be somewhat conservative and often slow me down because I could get way ahead of where the finances were or where the church was, and in some ways I could move pretty quick as a rector, and I needed the treasurer sometimes to bring me back to reality. but that bringing back to reality still can have a forward-looking view, can still be visionary in their approach. And so with that, the first thing that I want to say is that for me, the most important conversations that Roman and I have, and Roman and I talk almost every single day, but at least once, twice, maybe 3 times a month, we sit down for more than an hour. And in those conversations, it's amazing how seldom we talk about money. Um, now money's always there, money's always a part in some ways, but when we have we have short conversations about money. We have long conversations about where the bishop is asking the diocese to go, what the vision is, what the possibilities are. We talk about the congregations that we want to see revitalized, or we talk about the areas where we think there needs to be a congregation, where there isn't one now. We talk about long range kinds of visionary things. And that is by far the most important conversations that I think we hold. And that I always valued when I was rector of a parish from treasurers being able to say, here's kind of where we want to go. Now, to do that, I'm gonna get back to Roman in just a second, because one of the first things that Roman needed to do when he came here was to get a clear understanding of where we were. He's already said that part of the treasurer's job is to have a real clear picture of where the congregation is in its financial life, in its life in mission and ministry, and uh, that was and so Roman, when he came to us a little over a year and a half ago, that was the first task that he did, was come to an understanding of what the resources were. Rather than saying, well, we don't have this or we don't have that, he went to discover what we did have. He went to discover what the assets really were. And and I'm going to ask Roman to describe that process in just a second, but I want to remind us as we do that a lot of us assume we know what the funds are. Or we assume, for instance, if a fund is restricted, why is it restricted? Was it restricted by the donor, or was it restricted by the vestry, or was it restricted, in our case, by a board? Or do we just think it was restricted because that's what the culture has told us that it is? Um, and, in doing that work, I will tell you that Roman found several $1,000s, certainly probably into tens of thousands of dollars of money that we did not think we had access to, that we in fact did have access to. So I want him to describe kind of the process of going back and getting that clear picture of where a congregation is by taking a look at the assets that they have. Roman.
Well, in our case, at a diocesan level, it involved finding source documents, right? And the same would be true at a parish level. One of my first tasks was identifying source documents for estate planning documents for trust purposes, understanding uh, understanding the will of the grantor, and comparing that to financial statements, how certain assets were being treated. And the same process would be beneficial for a parish. Over time, uh, things become habit, they become the norm, uh, without potentially continuing to verify or check as a treasurer transitions, as the vestry transitions, finance committee transitions. I was telling Canon Dan earlier today, I knew of a church that was the beneficiary of a charitable remainder trust, and the living beneficiary that was receiving the income from the trust uh, had died 4 years earlier. And because the church was not in communication, did not understand the nature of the asset, they just treated it as a restricted fund and didn't realize that 4 years earlier, the last remaining beneficiary passed away, and the value of that trust now belonged to the church in an unrestricted manner. So part of this is just identifying those source documents and going back to that source and verifying that assets are being categorized correctly from an accounting perspective. Uh, Canon Dan already mentioned this idea of restricted. Sometimes we throw that word around a little too loosely uh, because it's not equal, right? If it's a board restricted situation or at the parish level, a vestry restricted pool of funds, uh, strategically, the vestry can vote to reallocate those funds, to unrestrict them, to restrict them for a different purpose, to utilize them for a different purpose. Uh, Understanding what you can work with and what you can't work with, what's truly restricted by a donor, uh, and what is not, is key. When you're building a plan, part of this is assessing your current status, knowing where you are today, so that you can, as I referenced earlier, identify with the rector's vision, the vestry's vision, where the church wants to be, and then creating a plan to get from here to there. Uh, so that's a process that I would encourage each and every one of you, an exercise I would encourage each and every one of you to engage in your parishes if you've not done that recently, uh, because there are changing circumstances around certain gifts, around certain trusts. And that's something that your church may benefit from. At a minimum, it helps incoming treasurers, incoming vestry members to understand with a refresher every few years the nature of the restrictions for these trust funds or endowment funds that the church may be the beneficiary of.
Thanks. I just think it's so important, and it's important, I think, for us to, as leaders, whether we're the treasurers or whether we're the rector of the church or have some other role in the church, a church administrator, to know the why behind the restriction. Why was it restricted? Who it was restricted by? Some of those basic kinds of information. And then for me, as we look at the treasurer being a part of the strategic leadership, it's not only answering that why was it restricted, but is that why still valid? I told Roman the story yesterday or today or something of a church that I consulted with one time that had received a gift back in about 1900 to ensure that they always had Easter flowers. And they received that gift in stock. I can't remember the name of the company, but it was something, like IBM or or somebody like that. I don't know if they even existed in 1900, but that suddenly they had, what was probably a very simple gift in 1900 to ensure that there were Easter flowers had turned into over $20 million. That was restricted to flowers for Easter. Can you imagine how many flowers you could have in the church for that? And so the knowing the reason why it was restricted, and then sometimes finding ways, even if it's donor restricted, to either go back to those families and say that the reason that ceases to exist, or in the case of that church, we actually went to court and asked that the trust documents be altered so that that congregation could use that money for mission and ministry rather than just watching it grow and not being able to touch it. So knowing the why behind any kind of restriction, donor, board, or cultural, um, is I think really important. Um, I want to shift just a little bit in our conversation because I think one of the things that's key to strategic leadership, and I think one of the things that we've kind of intimated by the way that Roman and I have said that we talk with one another, is that the treasurer needs to be a part of the conversations early on. I'm not a big fan of the rector or the vestry or the rector and the senior warden, or the rector and his staff or whatever, coming up with a vision and then going to the treasurer. I would like treasurers to be a part of the initial conversation, to always be engaged in those conversations, because that gives them then the ability to to kind of go back to their desk and say, boy, this vision sounds important. This sounds like it, something that God may be really calling us to do. How can I make that happen? And in fact, Roman's done some of that in our life, that we've had those moments in conversation where Roman went back to his office and sometimes came back a day later and sometimes 2 weeks later, and maybe even once or twice a month or so later, and said, here's how we can make this happen. Roman, I wondered if you would share a little bit about what that's like for you to do that kind of work, being engaged early in the conversation so that it then gives you a better chance to go out and do what you really think you're called to do as the CFO of the diocese.
Well, first and foremost, it's exciting. It becomes a problem. It's a Rubik's cube to solve, right? Uh, I enjoy being tasked with uh, creating a plan to take something from conception to actualization, right? Being able to do that is rewarding, especially when we're talking about spiritual matters. So it particularly excites me to hear voices that may say, we can't do that, we don't have the funding, it's not in our long-term plan, but to know that it is a key part of the vision for the diocese or the organization, and be able to find a solution for that challenge. uh, Again, oftentimes it comes with trade-offs. Sometimes it's the motivation that's needed to dig a little bit deeper, analyze a little bit more, maybe pick up the phone and make that call that says, family, I know that the donation was for this purpose, this was the restriction, but I'd like to share with you about a different direction, a change, something else that we're doing that I think may excite you, you may get behind. It creates an opportunity to solve that challenge, that problem. And sometimes the answer is, as you've already referenced, Canon Dan, sometimes the answer is we're going to have a capital campaign for that, right? It is
Sure.
doable, but we're going to have a capital campaign in order to make that happen. Uh, but being able to participate uh, in the early stages of those discussions so that a plan can be formulated behind the scenes before it's presented to the diocese or at the parish level to the congregation is essential in terms of role and function, right? Eventually, it's going to come back to me anyways. I will have to be a voice in the discussion. So better for the bishop, for Canon Dan, for the diocese, for me to be involved at an earlier stage, very similar to a treasurer, right? Eventually, a rector and the vestry present something to the congregation that they have not confirmed from a stewardship perspective that the church can pay for. Eventually, the treasurer is going to be involved in that discussion. It's just a matter of whether you give them the opportunity to create a path, or you give them a challenge or a problem that comes with some potential PR challenges as a result of when they were included in the discussion. So I quite enjoy being engaged at an early level, and I believe that it puts you and the bishop in a position where you could speak more confidently, similarly to the way that it would for a rector and the vestry of a congregation when they include a treasurer early on in these discussions.
Good. Yeah. Saying something that's been underlying all of our conversations so far is that one of the things that we really strive for is to work with what we have rather than what we don't have. Um, we pay attention to what the assets are that we have and try to work from there. In my work with congregations, whether it's about money or whether it's about church growth or whether it's about um, volunteers being engaged in ministry, whatever it is, the thing that I often hear is, congregations tell me what they don't have. Um, or, I've done work with other dioceses, and sometimes it's the case there too. It's what we don't have. We would rather, and we'd rather work from a place of what we would call strength rather than weakness. So that what we do have, um, so that's just our approach. Right from the very beginning is talking about what we do have rather than what we don't have, or finding creative ways to get what we need. One of the things that Roman says to me from time to time is, okay, I know where we're going to go. Now I've got to figure out a map of how to get there, or what we need to get there. Whether it's again the capital campaign that he just mentioned, or finding assets in other places. That's forward looking and strategic in its nature to move forward with that. Roman, maybe whether from your corporate life or whether from nonprofit, maybe say something about that, looking forward and developing pathways to get where you want to go in terms of finances.
Well, it's not unlike your personal financial plan, right? If you decide you'd like to retire at 65 and take a couple of trips a year with your grandkids and go on an international vacation once a year and have a cabin in the mountains or a condo on the beach, whatever it might be, right? Quantifying how to make that happen is the most essential part to the process, because that's what enables you to say, this is where I need to be. So I know where I want to be, but where I need to be is quantitatively is at this place. I need X amount saved by then. You evaluate what you have today to work with, and then you can determine, is it possible to get there? Right? Quite frankly, there are times where it's just not possible to get there. But drawing from my prior career, we don't often think about school teachers as being highly compensated individuals, but I had a handful of families, couples actually, that were both school teachers, that lived within their means. They saved for 40-year careers. They had pensions, and they ended up owning their homes, and they had 7 figures in the bank when they retired. Right? It is doable. It's about being intentional. Number one, quantifying where you want to be. How do you get there? What's it going to take? Honestly and accurately evaluating where you are today, and then it just becomes numbers, right? Then it just becomes numbers. How do you get from here to there? What rate of return is necessary? What additional deposits are necessary? And the problem solving around making parish visions and strategic plans a reality 5, 10, 20, 30 years down the road, it's the same process. So it's something that most of us go through in everyday life to one extent or the other. Monthly budgeting, it's the same process, right? So as we're talking about this on a larger scale with parishes, there are microcosms of the same concept that we all use in our personal lives that we can lean on in terms of best practices, right? You wouldn't create a plan that involved the dream of a lavish retirement without quantifying and considering what does it take to accomplish this. Or you're just setting yourself up for disappointment, right? You most certainly wouldn't tell the world, this is what I'm going to do, this is where I'm going to be, if you have not quantified what it takes to get there. And so when I think about this planning, the thing that's unique about our parishes, and I think this is part of a shift that will be beneficial in terms of thinking for some of us that do come from a personal financial planning background, or we're focused on our own retirement planning, is remembering that to an extent, these are perpetual organizations that we serve, right? They're intended to have perpetual life cycles, time horizons, they're institutions, right? As opposed to, an 80-year life expectancy. These are institutions that require us, as part of our fiduciary obligation, to think much longer term, to treat them like university endowments in some ways, planning for the next 100 years as opposed to the next 5 years. So this is all part of the process that, again, to relate to your personal life, if you begin retirement planning at 25 years old, the likelihood of success is much greater than if you begin retirement planning at 40 years old, right? So it's really as long as is realistic, as far out in the future as is realistic from a planning perspective based on your congregation. I believe you should be maximizing that and pushing those limits to 50-year plans potentially, most certainly 20-year plans, and that may sound like an insurmountable task to some of you. But again, you get to a particular point and it all becomes about numbers. Then you start talking about stewardship, you start talking about visibility and leadership around investments and management of portfolios, so that in 30, 40, 50 years, the resources that you're stewarding can have the same impact from a ministerial perspective and a mission perspective 50 years down the road that they can have today.
Good, thanks. That actually takes us, we've got a number of questions that have started to come in, and I'm going to start taking a stab at a couple of them. As we look, first of all, there was a question about what do I mean by family, pastoral, program, and resource size. Those had to do with average Sunday attendance. 6 to 65 is the average Sunday attendance family, 65 to about 150 for maybe 160 for, or 175 for a pastoral size congregation and average Sunday attendance. Transition to be 175 to 225, program 225 to 450, and then 450 plus resource size. Just in general, I know other people use other numbers for those, but we're thinking about in terms of average Sunday attendance when I talk family, pastoral, program, and resource size congregations. And again, the family and the pastoral are informal, largely in nature, and program and resource are largely formal in nature and much more complicated. We're also asked the question about how far to point out into the future. And I think Roman just breached on that. We are currently doing some financial work here in the diocese that we believe will set us up for the next 75 to 100 years in terms of our finances. Now, program planning can't reach out that far. Life changes way too fast. The way technology is and everything else. I had a congregation talked to me about a month ago that said they were developing a 15-year strategic plan. And I really had to apologize to the rector because I laughed out loud. We don't have any clue what's going to happen, that far out. Nobody was planning in 2019 for 2020. So to a certain degree, what we have to do is be able to flex. The important thing that Roman was talking about and what we've been talking about in terms of future, is when we look out into the future in terms of finances. If we can do work now that helps set us up in the long term, then when new plans, new tactics, new opportunities arise, we may already have the financial wherewithal to tackle those, as opposed to having to go out and find those kinds of funds. It's that's just sort of a nature of what we're trying to do. I'm scrolling down to take a look at others. As a part of that planning too, I would say that I think every parish that I was ever involved in, we put money in the budget um, every month, every year in the annual budget for a certain percentage of that budget to go into a fund that was long-term maintenance, so that when we needed a roof, we paid for it. We didn't have to raise the money for it. When we needed, some of those kinds of things, that was there. It's been a question about rental income and does it pull congregations off a mission to become landlords? Well, it certainly can. Um, but I would also say that renting, the potential of renting space, a lot of our congregations, particularly some of our smaller ones, family and pastoral sized congregations, have empty buildings during the week. Some of our larger congregations, we have more activity going on, but we often have empty space during the week. Is there a way to monetize that in some kind of appropriate kind of way? I'm not suggesting we go out and buy houses and become, landlords of a bunch of rental properties, but I will say that more and more congregations really struggle, if at all, having the ability to do their life simply off of plate and pledge. There's got to be these days, for the most part, other sources of income. I know that there's been webcasts by this organization, by Episcopal Parish Network, on insurance and all the various things that are certainly going up in costs, and we understand that. The cautionary tales is that you really do have to have very clear guidelines. If your diocese has them, if or your congregation needs to develop them, about who you rent, what activities you're going to allow on the property, what type of insurance you need people to make sure that they have. If you do that kind of planning and do a well-written document up front, then it takes away some of the problems that can come about when we're taking a look at rental income.
The,
Go ahead.
so the other thing I would add to that, to try to help keep congregations on mission, I would encourage you, if your diocese, for example, here in Central Florida, we have a real estate commission that frequently considers these types of situations and advises our congregations on rental opportunities. So this is something that I think is a support vehicle that allows local parish leadership to stay more on mission. But I would also like to add that everything we do in terms of the assets, including the real estate assets of our parishes, is a capital allocation decision, right? If we decide that we would rather have an empty building that we're going to maintain and we're going to go to the expense of insuring, that's a capital allocation decision, right? We're allocating capital to that purpose. And then we have to evaluate from a stewardship perspective, is that a good use of our resources? And quite frankly, sometimes, as Canon Dan mentioned, it's a better use of resources to provide rental space to various programs, sometimes even longer term lease agreements. But the cautionary tale for me comes in the form of the lease agreements, right? It is very important to have high quality counsel when it comes to signing lease agreements, drafting them, reviewing them if they're provided by the potential tenant. Long-term lease agreements, I've seen multiple long-term lease agreements, multi-year lease agreements that don't have, for example, inflation escalators, right? In Central Florida, we've seen rents increase substantially over the last 10 years, and not having an inflation rider as part of a lease agreement so that that rental rate keeps up with CPI or with inflation it's a misstep on the part of the parish. So it's very important to have wise counsel when drafting and executing those lease agreements. Can I skip down? I see there's another question here from Francis Clark, comment and a question from Francis Clark around spending time, would like to spend time strategizing for the future. One of the things that we do in the Diocese of Central Florida to allow more segregation of duties in this regard, we launched this year a congregational bookkeeping service so that the actual bookkeeping work can be performed by staff accountants and full charge bookkeepers of the diocese in my department. This enables the parish treasurers to continue interacting with those that are performing the bookkeeping duties, but have the freedom to not be caught up in some of that bookkeeping work, and just be able to perform oversight duties, leadership duties, and stay better engaged with leadership conversations at the strategic level for their parish. So I would check and see if your diocese has a congregational bookkeeping service like that. It's something that can be performed at scale pretty affordably. We have some churches that are as low as $400 or $500 a month. So it's something that can be provided as a service and really give that additional structure for smaller parishes that don't necessarily have the ability to have internal segregation of duties.
Yeah, I would want to add to that that one of the things that I think is really possible, particularly with some of our smaller congregations, but also our resource congregations towards our smaller ones. One of the things that we notice in Central Florida is that often within 10 miles of our smallest congregation is a really big one. And resource meaning that they can provide resources. Is there a way to band together for 2 or 3 small congregations to band together to really have a good professional bookkeeper? Is it the diocese can provide that resource? Is it that a larger congregation might be able to help resource some of the smaller congregations in their area? The issue around this bookkeeping, it seems to me, is a place to be creative, and to because we can get tied up in the weeds, and it's really important, to look at options, and including, you know, I'll tell you one of the things that Roman does on almost, I guess, a quarterly basis, maybe more often than that, is that he meets with the other treasurers in Central Florida, or he meets with the treasurers of another diocese. I mean, he has a regular meeting with the chief financial officer of the Diocese of Southwest Florida. And they spend a couple of hours together, talking about things. Why not treasurers do that kind of thing with the neighboring parish, or the neighboring 2 or 3 parishes, to discover how other people are getting the job done and working it out? We don't have to be islands. We're the Episcopal Church, and we are interconnected to one another. And I think that's it's really important for us to remember that.
Absolutely. I see another question here. Canon Dan, do you want to take this one? How much do treasurers interact with the vestry? Should it be mostly with the rector?
Well, sure. I will tell you that when I was rector of a congregation, and I've been rector of what, 1, 2, 3, 4, 5, 4 congregations, and associate at another 2. Um, I never had a vestry meeting where the treasurer wasn't there. It wasn't there for the whole meeting. I do know congregations where the treasurer comes in and makes a report and leaves. Um, I I think that goes again. I think that causes the treasurer to look in the rearview mirror and talk about what has been, and perhaps what is, but gives them very little opportunity to engage in the conversation of what can be. Um, and so I always wanted a treasurer to be in the room with the vestry for the entire meeting, and to be a part of the conversation. Now, they may not have had a vote, or they may not, or something like that, but I always found it important for them to be engaged in the full life of the vestry, and the conversations. I mean, it's amazing where the best ideas come inside of a vestry meeting. Sometimes they're in the most offhand sort of comments as opposed to what's actually on the agenda. Um, and for the treasurer to be in the room to catch that, and then to be able to follow up with the rector or the executive committee or whatever. Um, I just always found in my own life really valuable. I see a question
Thank you.
about renting space. Does it jeopardize tax exempt status, Roman?
So no, it doesn't automatically. But the thing you have to be careful about is not creating unrelated business income tax, UBIT. Uh, so part of protecting that tax exempt status is ensuring that that rental income doesn't become a substantial business unrelated to the tax exempt purpose, right? So if it, and the substantial is really, it's a materiality test. So the answer to the question is complicated in detail in specific situations, but in general, it requires an analysis of materiality for the revenue being generated from the rental versus the overall revenue of the nonprofit organization.
Yeah, good. I see a question about, do we resource auditors for smaller congregations? The answer to that is that we can, but what we really encourage is our smaller congregations to do something I just mentioned a few minutes ago, and that is figure out a way to send a team from St. Mark's over to St. Stephen's and vice versa, so that they can do the audit. Our canons allow for internal audits to take place if we're under a certain amount of, if the budget is under a certain level. If it's over a certain level, and Roman, you may be able to tell what that level is, 500,000 or something.
It's actually 300. So if
Okay.
it's a parish below 300 in plate and pledge,
Then they can do a self audit, as long as the people doing the audit are not people who are writing the checks and balancing the books. But we've encouraged teams, for a congregation to look to the congregation next door, and vice versa, to do those kind of audits. Our system says that if you're over 300,000, then you need to have a more professional audit accomplished on your on your on your books. Our bookkeeping service technically could do that kind of work, but to this point has not. Who knows what it'll be in the future?
I see another question here from Kenneth Feely. It says the best way to keep track of restricted funds, the terms, restrictions, and the donor. So depending on the funds and depending on the type of restriction, we may pool board restricted funds, not necessarily donor restricted funds, but board restricted funds. In terms of tracking these details, it goes back to the source documents. So find the source documents. What I've done is create a spreadsheet based on information quoting the source documents, and create a structure where you create a digital file essentially with all this information, and make sure it's shared with your auditor. This is something that the auditor oftentimes will include as part of their analysis if you have a good auditor, and they will keep those records in the audit report, so that you have an authoritative reference, let's say, besides the source documents, but something that is independent and independently prepared by an auditor.
Thanks. There's a question about audits. Roman, maybe you could take that. CPA review audit or a certified CPA audit. I frankly don't know what the difference is.
Yeah, so in the Diocese of Central Florida, we require a certified CPA audit, not a review. So it is a full-fledged audit. It's one of the reasons why because of the cost prohibitive nature, oftentimes, of having CPA audits as opposed to reviews, it's one of the reasons we allow smaller congregations with a plate and pledge below $300,000 annually to go the alternative audit route, which is the internal audit that doesn't cost them anything. Like most services, the inflation over the last 10 years and the cost of audits is measurable. It's significant. And so that's something that we are actively discussing and evaluating those thresholds for where we do require congregations to have CPA audits as opposed to reviews, understanding that it's more cost prohibitive today for certain congregations than it was 10 years ago.
Good, thanks. I think that I noticed that how Lawrence has said that certified audits are $25,000 to $30,000. I don't doubt that. That's certainly we spend at least that, maybe, and probably more than that on our audit every year. And so it's certainly not insignificant, which may mean maybe the argument for raising some of those thresholds. Somebody also said it sounds like threshold requiring an outside or set by the diocese. It's not consistent across different dioceses. That's correct. Every diocese gets to, make those kinds of decisions on their own. I would guess that there's similarities between dioceses, but yeah, those kinds of things are set by the individual diocese as opposed to being something from the national church. Wow, almost an hour has gone by in a heartbeat. Um, let's see if there's any final questions or comments from folks. Otherwise, we will thank you for what's been for us, I think, fun. And I appreciate other comments. I see several business things, and the wisdom is always in the room. You and so sharing with one another, I see as truly important.
And I'm going to tackle, just because I see it's been sent here a second time. I can answer this quickly. The question from Hal about how do you use capital budgets separate from operational budgets? So, as you know, operational budgets are the day in, day out activities that flow through the P&L or the statement of activities versus the capital budget and capital operations that lead through and translate through to the balance sheet. So for us, for example, if the diocese acquires a piece of property, a piece of land for future expansion, that's a capital investment. It's a capital expense. And so thinking about it in terms of long-term investment versus short-term expense is the easiest way in general to consider capital versus operational budgets and investments. I don't know. I assume that our email addresses have been provided. If they're not, you most certainly can provide my email address. If we didn't get to any of these questions and someone would like to email me directly, I invite you to do so, and I'm happy to engage offline.
And you can find our email addresses on our diocese website. They're posted.
Yeah, there you
go. So, there you go. I want to say thanks for joining us today. I've been energized by it. I hope you have been. Like Roman said, if you'd like to reach out, please do. We'd be glad to engage. So folks, thank you for your time today.